stocks sitting near all-time highs. So what should you be doing with your money with markets at these levels? Let's bring in Bernie Clark, Executive Vice President at Charles Schwab Advisor Services. He joins us live from the Schwab Impact Conference in San Diego. Bernie, great to have you with us.
It is great to be here.
You know, for every guest, we get all these little notes here. And the notes that I'm reading don't really jive with the markets being at record highs. 65% of your advisors anticipate a possible recession. That's now up versus 6 months ago. 40% of advisors saying reaching client goals will be difficult. 83% of clients are worried about a recession. And yet here we are at record highs, Bernie. What gives?
You know, I think you're feeling some of the impact of the volatility we've seen since really the fourth quarter of last year. And the ups and downs. We fielded the study in September, and advisors are notoriously cautious on behalf of their clients. But I tell you, I'm at Impact right now, and there are 2,300 of our clients here, and there's a lot of optimism about where we're going in the future. And perhaps we're just starting to see some more normalized markets with some ups and some downs instead of those long down and long up trends we've seen over the past decade.
Do they buy into this value rotation that's been going on?
I'm sorry?
Are they buying, your advisors, do they believe in this value rotation that we've been seeing in the markets?
I think they do, and they're listening carefully. I would tell you we were very careful around some of our predictions as we were coming into this, and we had some of our economists talking yesterday, and you can see the movement and the rotation that they're taking everybody through and rebalancing. But remember, advisors fundamentally, they are in for the long haul, and they're working more on the life plans of their clients often than the portfolios, and letting the portfolios follow in that direction. So they're astute, but they move cautiously.
But Bernie, if we could read through to some of I think the sentiment you're expressing, can we take away that a lot of advisors who are conservative for their clients have been more conservative in this environment, and if anything, are underweight or might be in a mode where actually with a very bullish close to the year, they may be feeling some anxiety, possibly some FOMO?
You know, I think what they're doing is they're being rather neutral in the environment, as we've seen, and trying to not to overweight in any one direction, but moving as the market has moved. They tend to move a little bit ahead of the sentiment of the retail client, and that's kept them out in front of the curve, I think more so, and aggressive where they need to be aggressive. And again, the portfolio is never being structured as an overall entire firm portfolio, but more directed towards the needs of the individual client.
It's Bernie, it's Karen. Let me ask you about on the fixed income portion of your portfolio for clients. In this rate environment, what are you advising? Smaller or more out on the risk spectrum, or just get very low rates?
Well, I think the important thing to remember is, as a custodian for advisors and having $1.7 trillion in assets that we safe keep for them, we don't make the recommendations on the portfolios. The advisors do. And they individually craft them for each one of their clients. So it's really a very individualized decision, and each advisor has a strategy that they're following also on behalf of their clients. So it's not our job to recommend the mix of product that they're in, but we are making sure that the capability and the products are all available to them.
Bernie, great to speak with you. Thanks for your time.
Okay, thanks very much.
Bernie Clark of Charles Schwab Advisor Services. This is all part of the conversation that we've been having for the past couple of days, and that is, do you believe in this rally? Is seasonality going to be enough to keep us at these levels going into the end of the year?
Yeah, you have a tremendous amount of news flow that's going to take place, and you have the year end. So I think you're going to get whatever weakness you're going to get is going to be in November, and then everyone's going to get back to work in December. But when you look at Charles Schwab and those types of stocks, they're very levered to interest rates, because they carry such a big balance. So
the company itself.
The company itself, when we're talking about this, the stock alone. So they've been fairly judged on where the interest rates are. So to make them investable, that's why they've underperformed. And now with Powell getting in the way, saying that rates are not going up as soon, it's great for the market. So to your first question, I think the market will have a tough time going down for any extended period of time when they continue to get easy money. But for this stock in particular, it's tough.
Look, clearly being skeptical as I've been has been wrong. I mean, the market's we're at all-time highs. Here we are. But the reasons to be skeptical are still there. I mean, they have not gone away, in my opinion. And we can talk U.S.-China. Again, I don't think, I think it's all been sort of posturing. I don't think anything's really happening there. Negative rates still exist. Slowdown still exists. I mean, Warren Buffett with $122 billion, a record level for him, sitting on the sideline, and his indicator is absolutely flashing red. His indicator being the Wilshire 5000 market cap over GDP. It's about 146%, levels we haven't seen in probably a decade. So, again, all the warning signs are there, but the market wants to continue to go higher, I think, to Steve's point.